Hey everybody, it's Will at VIP Mortgage and it's time for a local lender update. Well, markets were trending slightly downward, but pretty much unchanged from last week until today. And exactly what I've been mentioning the last 2 weeks is what caused the difference, and that is our first job report in 2025. This covers jobs for December, and the job numbers were way stronger than expected. And as usual, the headline number is causing the market to react in a negative kind of way. Both the bond market and the stock market are reacting negatively to this because job growth is strong economic data, which makes people nervous that inflation is going to start taking off again. As usual, they revised the previous 2 months of job numbers downward. I don't understand why people haven't caught on that the headline number doesn't really matter, because 2 months later, we're going to revise it downward anyway. The other thing that's interesting from this jobs report is all but 20,000 of them are 16 to 19 year olds. These are people who are still in school, and that means that they're probably part-time jobs. So while it was a stronger than expected job numbers, most of them being for 16 to 19 year olds, it's part-time and it's December. So they're probably not going to have a job next month because it was seasonal, or at least a good number of them were seasonal. And so we're going forward from here. So we start off January going the wrong direction. I do expect volatility. The last half of 2024, we saw all sorts of up and down movement on the bond market, and of course then in mortgage rates as well. And so that volatility is going to be something that we can take advantage of. As more people get nervous, as the rates go up, we can start to show buyers that they have a really unique buying opportunity. As the number of people that are going, whoa, I'm going to wait, increases, the ability to negotiate with those sellers goes up, the ability to get a better price, get some more concessions, even buy down the rate. All of those do become a factor, and of course we know whatever they close at on their purchase is not the long-term rate. Most likely in the next 2 to 3 years, we're going to refinance them anyway. So one other thing I want to add that we're starting off the new year with, we're going to start throwing in some tools you can use from the world of lending when you're talking to clients. Today I want to mention recast. Recast is when we close on a loan with say 20% down, and then later there's a large influx of cash for the buyer. They can recast that loan by putting a significant chunk of money down on the principal, and then instead of it just getting them closer to paying off, we recalculate that monthly payment based on the original interest rate and now the lower balance, dropping their monthly payment. This tool has come in really handy in 2024. We're seeing a ton of people who want to buy and then sell, and when they do that, the recast tool is actually almost free and way easier and cheaper than using a bridge loan. So that's something to keep in mind as you're talking with your clients. If there's anything we can do for you, or we can get you a rate quote for your specific situation, please give us a call at 719-232-7553.